you very much, Adam, for inviting me to present some of the research results from Forrester about the state of corporate banking and how corporate banks can digitize. What I want to share with you today are 3 points, really. So as you can see on the slide here, we will discuss the state of digital maturity in corporate banking, the drivers of digital transformation, so why suddenly corporate banks are so keen to transform. And also I will share with you digital best practices from some global leaders who, despite some of the obstacles, are managing to transform. So starting with the first point on our agenda, the state of digital maturity in corporate banking. I think the image that the team has brought here about of the spaceship, I think, is a really aspirational one, because it really we really aren't there yet. You know, we are more of a kind of bicycle, or even more, it's a 19th century version. So we are not quite there yet. And there are a number of reasons for this. First of all, I think everybody always says in corporate banking, if you work in corporate banking, the typical reasons we're hearing about why digital transformation has been so slow compared to retail banking, for instance, is the really high product customization and complexity. So if you think about corporate banking services, they are very much tailored to enterprise client requirements. So that means that if you're a sort of a smaller company, you will have very different requirements from someone perhaps who is a multinational working in manufacturing, who might need some more help around the supply chain. And therefore, this makes it a little bit more complex, because different personas, whether that's enterprise treasury or some of the corporate account users, they will want different types of functionality. So that's one of the reasons. The second one is really kind of a lack of credible challenges. So if you think about, again, retail banking, there's been so much influx of fintech players in that space who really are challenging some of the retail banks because they offer competitive services. So the likes of N26 or Revolut, who really are very prevalent in that space. In corporate banking, we haven't really had that same level of challenge. So yes, there are some new entrants like Cantox, for instance, around foreign currency management, but predominantly a lot of these fintechs have been working with corporate banks to improve corporate banking as opposed to challenge the incumbents. And also the reason why they haven't been so keen to challenge the incumbents is because there are very strong barriers to switching in corporate banking. So most corporate banks will not want to take their full relationship and move it somewhere else because the complexity involved and the risk involved are simply too high. So that means that often they stay with their current provider as opposed to change. And lastly, this is not really a technology or a competitive challenge, but really a simple sort of challenge of culture. So there can be quite strong internal resistance to change, where in a very relationship-driven model where relationship managers really drive some of those contacts and those businesses, there is fear that digitization will be sort of a competitive channel and that will sort of disrupt the existing business models. So I think all of these reasons combined have really meant that corporate banking has been a bit behind retail banking. Now, if I think about digital maturity, we think of three phases. And you can see them here on the slide, where phase number one is really bolt-on. So it's your existing business model, its existing business, your existing channels, and maybe you add one channel to this. You might add online banking. So you are really not changing fundamentally either your operations or customer experiences. You're just adding an extra channel. So it's like a bolt-on. You're bolting on a digital channel to your existing experiences. And this is where I would say the vast majority of corporate banks are. Now, the level up from that is where firms really transform themselves, where they use digital technology to change their operations, to change their own business model, to be maybe more efficient, to offer new types of products. So that's that kind of level number 2. And there are some leaders that I will show you in a second that are really aiming for that level at the moment. And lastly, there is number 3, which is disrupting whole industries. And this is very, very different. This is not only disrupting yourself, but actually disrupting your entire industry, because you are adopting technology, perhaps like blockchain, to really change how the supply chain is run, for instance, to change how supply chain finance functions. And that in that level, I think I don't see very, very many players. Maybe there are singular initiatives, but not really, entire sort of banks that are at that very level. So these are the kind of the state of digital maturity in the industry. Now, things are changing at the moment, and then you will kind of see, how that functions.